What's up, everybody? So we're going to go with today's daily crypto news. This is DigiHash, and we're going to be talking about everything that there is in the world of crypto. So today, we're actually going to be starting off with today's money. So we're going to be starting off with like a little bit of last week's news, what was popping last week, just in case any of you didn't pick it up, because I didn't pick it up, okay? Like, I didn't actually know what was going on last week, so I definitely want to make sure that this week I'm on top of it. So I'm just going to talk about the top stories for a little bit last week and definitely today's top stories, because everything's changing. Bitcoin's at $50,000 right now, and so I actually don't have any Bitcoin. So yeah, I'm hyped that this is going on and all that. And we know why, because inflation is crazy. People are like, you know what, I need to have some of that digital gold, that is digital Bitcoin. So I understand, I'm actually right now at a point where I'm like, yo, I have to start budgeting because I need some coin. I need some crypto. I have zero crypto. All right, so today's first news is Sam Bankman-Fried. He's back in the news, and the title is, for those of you that are just listening, maybe you're traveling to work or something, or you're just putting your audio while you're maybe doing the dishes. I'm going to just listen carefully. And for those of you that are watching, we're about to see a picture of Sam on his private jet that he used y'all money for, because I never invested into Sam Bankman-Fried's FTX. I was thinking about it. I was actually thinking about buying the FTX coin, but I actually didn't buy it just because I didn't know enough about it. I was trying to make an account on FTX. I was literally trying to make an account on FTX, and I was scared away when I read that you need $100,000 to make an account. Otherwise, we're going to just take your money and block the account. So I didn't make an account for that reason. But I was literally going to be like, oh, maybe I should just buy the coin because the coin's going up. But I'm so thankful I didn't. It really sucks for the people that did, and my condolences goes out to you. But apparently, you're going to get your money back, because that's what today's news headlines about. This was published on Saturday, February 10th. The title is "As Sam Bank." It's from CNBC. So we don't. I don't know. This is I don't know what kind of. I don't know if CNBC is very trusted, but this is the news that they have today. So for Saturday, as Sam Bankman-Fried awaits prison sentence, FTX customers await a surprise. Full repayment. That's a good thing, right? That they're gonna get their money back. But how long will it take? And will they actually get their money back? So the key points with Sam Bankman-Fried preparing to face sentencing next month and a potential life behind bars, FTX customers are looking at the possibility of recouping their money. Let me just say something about that. This dude is 30 years old, and he deserves every bit of it, because he really did a huge. I went to MIT and I saw him on the big screen, and he was always fidgeting. So I know I couldn't trust him. But he's 30, and he basically scammed a whole bunch of crypto investors, which is messed up, and he deserves to be in prison. Let's not get it twisted. But life behind bars at 30, that's a really big deal. Because when you go from broke to rich, you'll forget about being broke. But when you go from rich to broke, you'll never forget about being rich. Bankruptcy lawyers for the FTX estate said last week that they expect to pay back all customers. The optimism stems largely from the rebound of the crypto market and appreciating value of FTX venture investments. As Sam Bankman-Fried prepares to face sentencing next month for his criminal fraud conviction tied to the epic collapse of FTX in 2022, former customers of the crypto exchange have reasons to believe they could actually recoup their money. Bankman-Fried, because he's fried, who could spend the rest of his life behind bars, was found guilty in November on 7 criminal counts after roughly $10 billion in customer funds from his company went missing. How do you misappropriate $10 billion? This is what happens when you don't have any money management from the beginning. I know what it's like to lose a whole bunch of money. And I'm thankful that I lost a whole bunch of money when I was young, because losing $10 million, this guy will never recover from that. That's a tax write-off. He has a tax write-off for the rest of his life. But much of it went towards other investments that have of late appreciated dramatically in value. Lawyers representing the bankruptcy estate of FTX told a judge in Delaware that last week that they expect to fully pay customers and creditors with legitimate claims. Wow. Bankruptcy attorney Andrew Deitrich, who works with FTX's new leadership team, said there's still a great amount of work and risk ahead in getting all the money back to clients, but that team has a strategy to achieve it. It's a welcome development for the many thousands of customers, reportedly up to 1 million, who collectively lost billions of dollars in FTX collapse 15 months ago. When the crypto exchange spiraled into bankruptcy in a matter of days, given the lightly regulated and unsecured nature of FTX and the crypto industry at large, those clients faced the real possibility that the vast majority of the money had evaporated. Plenty of failed hedge funds and lenders lost virtually everything during the 2022 crypto winter. So those hedge funds who lost their money first, they're probably going to get it back first. All the big name players, what's that company? Was it Singapore that gave $200 million to FTX? Sheesh. They'll probably get their money back first. Maybe. Bankman-Fried never believed his company's situation was that dire. Even as regulators and federal prosecutors unearthed evidence showing that a 31-year-old entrepreneur and his top lieutenants have been pilfering billions of dollars from customer wallets for years, Bankman-Fried insisted that all the money was still somehow accessible. He's gone delusional, and he's trying to keep his good name, because remember, his reputation just went up in smokes. That's tough. Also, if I had money in FTX and I lost my money, depending on how much it was, if it was $100,000 that I lost, I'd probably fly to the Bahamas and go see him about that. I'd make a trip to go see him about that. But if it was $1,000, $2,000, I just write it off. If it was $50,000, depending on my age too. If I was 80 years old and I was $50,000 and that was the last I had, I'd be really upset. But what really can I do? At my age, if I'm in my 20s, if it was $100,000, I'd definitely go and try to get that money back. FTX US remains fully solvent. Bankman-Fried wrote in a Substack post on January 12, 2023, while he was under house arrest at his parents' home in Palo Alto, California. He said the exchange should be able to return all customers' funds. In some ways, his narrative appears to be proven true. So if he's able to return the money back, does he get out of jail? Does he get out of prison? Does he get the money back? So there's a picture of his mom and dad, and yeah, like this is ridiculous. Like what can they do? Like they're obviously stressing out about it. They kind of had to stick up for their son because they were enriched by their son, and now it's looking really dire for them. 4 months, FTX's new CEO, John Ray III, and his team of restructuring advisors have been clawing back cash, luxury property, and crypto, as well as tracking down missing assets. They have already collected more than $7 billion. Wow! And that doesn't include valuables like $26 million in gifts and property to Bankman-Fried's parents. His parents are definitely like, yeah, we're not getting that money back. You're going to have to take it from our hands. Or the $700 million handed over to K5 Global and founder Michael Kives, who invested FTX cash in companies like SpaceX. Some of those investments have seen a precipitous rise in value. FTX have been negotiating with bidders about a potential reboot of the company, but those efforts were scrapped last month. Yeah, who wants to go and use FTX again? Are you crazy? There is no way that anybody with a right mind would use FTX again after that happened. Braden Perry, who was once a senior trial lawyer for the Commodity Futures Trading Commission, the U.S. regulator that oversaw FTX's registered derivatives platform, told CNBC that the decision to repay users in full came after the abandonment of efforts to restart the FTX crypto exchange in favor of a focus on liquidating assets to make customers whole. Getting actual money back in the hands of customers still remains a challenge. While a lot of the value has been recouped and more is to come, divvying up large amounts of cash is a complex process in bankruptcies, particularly when so much of the money is in non-traditional and liquid assets. Even Ray was doubtful at the beginning of the process, noting in late 2022 that at the end of the day, we're not going to be able to recover all the losses here. What Ray wasn't banking on was a huge market rebound. When he made those remarks, crypto was mired in a bear market with Bitcoin trading at around $16,000. It's now about $47,000. Wow, because the price of Bitcoin went up, they were able to get the money back. That's a good thing. Now Bitcoin's at $50,000, by the way. This was actually good news. And it's for the people that lost their money. In September, the bankruptcy team released a status report showing that FTX had $3.5 billion worth of digital assets, with over $1.1 billion coming from its Solana investment. Solana fits into a category of so-called SAM coins, a group that also includes Serum, a token created and promoted by FTX and sister hedge fund Alameda Research. After the dust settled from FTX's bankruptcy, Solana saw a huge run-up in its price, and it continued to rally after the September report. Since the end of that month, it spiked fivefold. Meanwhile, FTX's Bitcoin stash, which was worth $560 million at the time of the September report, is today valued north of $1 billion. Bankman-Fried's investments were not limited to crypto. He also used client money to back startups like Anthropic, the artificial intelligence company founded by ex-OpenAI employees. FTX invested $500 million in Anthropic in 2021 before the generative AI boom. Anthropic's valuation hit $18 billion in December 2023, which would value FTX roughly 8% stake at about $1.4 billion. Okay, that was a good move. 3 extra money. Because when you have more money, it's a lot harder to make money. Yeah, that's what Warren Buffett said. The more money you have, the harder it is to actually make money because you have so much of it. During Bankman-Fried's criminal trial in New York, Judge Lewis Kaplan denied the defense's request that it be permitted to say that FTX investment in Anthropic was a smart bet. The bankruptcy estate of FTX has been looking to sell its Anthropic stake, according to a court filing this month. Okay. In his biography of Bankman-Fried titled Going Infinite, wow, what a good name, Going Infinite. Michael Lewis said he was told by an investor interested in bidding for the venture portfolio that if it was sold intelligently, it should go for at least $2 billion. Lewis, who published his book late last year, wrote that based on his back of the envelope math, the $7.3 billion that Ray's team had come up with didn't include Serum, some large callbacks, and other venture investments that had appreciated value. For FTX customers, being made whole according to George rulings mean getting a cash equivalent of what their crypto was worth in November 2022. In other words, they're not seeing any of the upside of FTX's investments that are being given virtual coins that would allow them to cash out at high valuations. Of course not, because they didn't have the high valuation when they got scammed. But had they not gotten scammed, there's an argument to say that they probably would have seen those high valuations, which is crazy. That's really messed up. Well, at least you're getting your money back. At least you're getting to start back at break even. Hey, break even is better than negative. Still, some investors have found a way to participate in the FTX's ongoing odyssey. The market for FTX IOUs lit up last year as it became clear that the bankruptcy estate was cobbling together a lucrative portfolio. One financial firm that had lost around $100 million initially sold FTX debt for 6 cents on the dollar. Whoever bought that debt was a genius. In a new secondary market, out of concern that he may never get a better deal. As of December, those claims were going for... Okay, it's not funny, but it's crazy. They lost $100 million, sold $100 million for $600. So what is that like? If they have so if they have $100 and they sell it for 6 cents. Okay, I don't want this to get clipped and I look like a crazy person. Okay. So I'm not even gonna comment, but is that how much money did they get back? Maybe $6 million, $60,000, $600,000 from $100 million. They probably got back. In fact, I can do the math. I'm gonna do the math right now because I can do the math. So with $100 million times 6 cents, what did they get for that? $6 million. Okay. That's a heartbreaking tragedy. I would cry. To go from $100 million to $6 million. Actually, a millionaire. Still a multi-millionaire. I'm talking about them. I'm talking about this firm that lost basically $94 million. As of December, those claims were going for more than 70 cents on the dollar. So they basically sold their money at pennies because they were desperate, and now somebody's about to 10x that. If customers are eventually made whole, that could play a big role in Bankman-Fried's appeal, likely following a sentencing, which is set to take place in Brooklyn on March 28. Perry said it could also affect how the judge handles sentencing in the first place. Under the federal sentencing guidelines, and even assuming no monetary loss, SBF still faces at least 70 months in prison based on his base level offense, number of victims, sophisticated means, and leadership role. The massive losses that were originally expected would suggest 30 years to life in prison. Wow, so if they get their money back, yeah, I mean, that's fair. You get your money back. He's so potentially lucky. Potentially lucky. Renato Mariotti, a former prosecutor in the U.S. Justice Department's Securities and Commodities Fraud Section, told CNBC that judges typically consider that amount of restitution paid to victims at sentencing. If the victim is made whole, that is a big plus for the defendant. Wow, this guy literally found a silver lining. He noted, however, that the extent of the fraud coupled with Bankman-Fried's false testimony in violation of bond conditions could limit the reduction. I usually advise clients to pay restitution before sentencing if at all possible. Okay. So what do I think? I think this kid is in an impossible situation. Like, he really painted himself into a corner. He's going to have people after him. If they get their money back, fine. He probably will be fine. But to go from that high to that low, he probably will get paid to do speaking arrangements because, let's face it, if he gets out, people are going to pay to talk to him. Like, why'd you do it? What was going through your mind? Are you an idiot? And he's going to be like, no, clearly I'm not, because I had $1 billion of your money. And what was going through my mind? We were having fun. We were kids, and we paid the price. And I did my time, and I'm out. And if the people got their money back, like, there's really no reason to be mad at him. Like, I mean, okay. I mean, I'm not siding with the guy. I am not siding with Sam Bankman-Fried. I'm not siding with him. What he did was wrong. He should be punished. He should pay the price. He should definitely, like, he deserves to pay the price. But if people get their money back, you know, like, you got to take that into account. The judge is going to take that into account. So if the judge is going to take that into account, why shouldn't we? But I'm not a judge, so I'm just a commentator. Okay, I am a commentator on crypto. So next news we have from newsbtc.com. Bitcoin price nears $50,000 milestone again, with 91% of addresses now in profit. 91% of addresses now in profit, and I need to get myself a Bitcoin address. I need to start buying Bitcoin. Okay, I need to start buying 0.00001 Bitcoin, but still, I want to get in the game. Bitcoin is edging closer to the $50,000 mark after a week of extreme bullish price action. This news was written yesterday. It's already at 50,000. This was written on February 11th. Addresses in profit has now crossed over 90%. According to data from Into the Block, 91% of Bitcoin addresses are currently profitable. This means the vast majority of holders and investors have an incentive to continue holding, particularly as the next halving of Bitcoin miner approaches. Yeah, like, this is a big deal. 91% of Bitcoin addresses now in profit as price nears $50,000. Bitcoin has had an eventful week in terms of price action. The world's largest crypto recently grew up by 14.4% to reach $48,500 on February 11, its highest point in 26 months. This price spike, although highly welcome, seemed to have taken most investors by surprise, considering it was coming off 4 weeks of unimpressive action after the debut of spot Bitcoin ETFs in the US. Notably, Enter the Block's global in and out of the money profitability metric shows that the total number of addresses in profit is now at 46.87 million addresses, representing 90.53% of the total addresses. At the same time, 3.44 million addresses representing 6.64% are still posting losses, while 1.446 million addresses representing 2.83% of the total addresses are at the money or break-even point. Similarly, Enter the Block's in and out of the money around price metric, which follows addresses that bought between 40,000 and 55,000, shows that a majority, 83.17% of addresses are in profit. This is a hugely bullish signal and shows that the majority of Bitcoin holders are well in the money. As the price continues climbing, as the crypto approaches the $50,000 mark, more and more addresses are likely to move to profit. Bitcoin is set to keep shining. With over 90% of Bitcoin addresses now in profit, the price near $50,000, it's clear this bull run has room to run. The bullish action last week saw BTC closing over $44,000 on the weekly time frame for the first time in the current market cycle. BitMEX research recently reported that spot Bitcoin ETFs now have over $10 million worth of BTC under management. There is a high probability that the price of the top coin continues to surge as the activity surrounding these exchanges traded funds ETFs continues at this pace. Okay, so this is a catalyst, and they're saying that historically, Bitcoin bull runs leading up to each halving have always trended up and gone parabolic after the halving event. A similar trend could see the crypto asset reaching $60,000 before the next halving in April and $100,000 for the end of the year. That would be insane. That would really be insane. So, next from Cointelegraph, we have MicroStrategy buys $37 million in Bitcoin, bringing holdings to 190,000 Bitcoin. Wow. MicroStrategy snapped up another 850 Bitcoin, and this is about to be like $1 trillion company. MicroStrategy snapped up to another 850 Bitcoin in January, increasing its total BTC holdings to a value of $8.1 billion. You know what? You know what I would start doing? Okay, so obviously Bitcoin's at $55,000, and there's no, like, I am actually not planning on putting, even if I have $55,000, I'm not gonna put all that in Bitcoin. But what I will do is start buying other things that people need, like ledgers, and I'll start investing in Ledger or other things that people need for Bitcoin, because, like, I want to get in the game. So their BTC holdings is valued at $8.1 billion. Or Treasure, because I think Ledger got hacked like last time, like a few, I remember reading some article about Ledger being exploited. So but MicroStrategy, the largest publicly traded holder of Bitcoin, says that it acquired an additional 850 BTC in January, bringing its total holdings to 190,000 Bitcoin, worth $8.1 billion. In its fourth quarter 2023 earnings call on February 6th, the business software firm's chief financial officer, Andrew Kang, said it acquired 56,650 Bitcoin throughout 2023 at an average price of 33,580. Good for them. Overall, I admire this. Overall, MicroStrategy posted a net income of $89.1 million compared with a loss of $249.7 million in 2022. Somebody was sweating in 2022. Somebody was like, that's crazy. Could you imagine $250 million in losses, but knowing that your investment is going to pay out in the future, but knowing that you still have to survive in the current time? Excuse me. That would really be crazy. MicroStrategy Executive Chairman Michael Saylor said its 2023 performance could be attributed to investors recognizing the broader theme of digital transformation of assets. 2024 is the year of the birth of Bitcoin as an institutional-grade asset class. In fact, it's the first new asset class of the modern era. Yeah. The next 15 years will be a regulated, institutional, high-growth period for Bitcoin, very different from the last 15 years. In December 2020, MicroStrategy became the first publicly traded company to purchase Bitcoin for capital allocation. Since then, the company's share price has grown by more than 300%, while tech stocks such as Microsoft and Google have grown around 95%. Follow the money, follow the numbers. Clearly, MicroStrategy is right. When you're right, you're right. Saylor added the arrival of spot Bitcoin exchange-traded funds have been a catalytic moment, taking Bitcoin from a medium of exchange to a store of value. Something he said weakens past criticisms of the asset for failing to function as a currency. We don't need to address any of the currency criticisms anymore. Simply as a store of value, there's no reason Bitcoin can't continue to outperform at 100 times from where it is right now, Saylor said. While crypto market pundits have shared concerns that Bitcoin exchange traded product providers such as BlackRock and Fidelity would gnaw into MicroStrategy's market share, Saylor seemed unconcerned by any encroachment by traditional finance firms. He said MicroStrategy will continue to create software and work alongside Bitcoin developers on Bitcoin-based Layer 2 networks, along with other ecosystem participants to increase the firm's revenue in the coming years. Saylor closed out the earnings call by saying that MicroStrategy will continue to purchase more Bitcoin. That's the right thing to do. Craig Wright, trial day 4. Now we're getting into some today news. This is updated February 12, 2024. Craig Wright, trial day 4. Key documents appear to be unsubstantiated in Nakamoto claims. So he's claiming that he's Nakamoto, but I think I read somewhere, this might be it, where actually he's not Nakamoto. He said that he fabricated it. Let's see. On the 4th day of the Copo versus Craig Wright trial, Wright shifted blame to other agencies as his claim to be Satoshi Nakamoto was challenged. Why does he want to be Satoshi Nakamoto so bad? What's his upside? Why does he benefit from that association? Copa showcased evidence of anachronisms. Okay, what does anachronisms mean? Like, come on now. Anachronism, a thing belonging or appropriate to a period other than that in which it exists, especially a thing that is conspicuously old-fashioned. Okay, can you use it in a sentence? Everything was as it would have appeared in centuries past from one anachronism, a bright yellow construction crane. Yeah, so that's what that means. So including fonts that did not exist when the documents were supposedly created, leading Wright to admit their inauthenticity. However, Craig Wright shifted blame to several third parties, mistakes by former solicitors, sabotage by ex-employees, hackers comprising his systems, and even the IT environment, which he claimed could autonomously alter documents. This cast Wright, who professes to be an information security expert, in an unfortunate light. Okay, so why is he going for this though? But anyways, the article goes on to say, further complicating his position, Wright could not affirm the authenticity of documents related to the so-called Tulip Trust previously submitted in the U.S. climate litigation. I have no idea, Craig Wright said, and I cannot actually vouch for anything being completely real, Wright said, inadvertently bolstering Copa's argument. Yesterday, Wright had a surprisingly positive day at the trial as he caused some concerns for Copa when he comprehensively explained Bitcoin's network theory and presented a 2008 document citing Bitcoin Cash, which wasn't launched until 2017. However, the court knows that Wright has the technical capabilities to alter metadata as an expert computer engineer. The defendant acknowledged showing his university students how to change the metadata of documents. The trial is set to run until mid-March as the crypto community frustratingly waits to see whether the court rules out Wright's long-winded claim of being Bitcoin's originator. Why does it matter? I'm sure there's a reason why it matters, but... Okay, so next news. Blockchain would have saved $74 billion in credit card fees for Americans. Coinbase wrote this. This is from Coinmania.com. According to the State of Crypto, a report by Coinbase on Wednesday, Americans could have saved about $74 billion in credit card fees, averaging $600 per household, had they used blockchain technology to process their transactions. The report also revealed that merchants would have been $126 billion richer had they utilized low fees that cryptocurrencies provide to process customers' transactions rather than the enormous amounts spent on credit card fees. The report showed that the majority of the satisfaction of Americans with the current financial system is that it is costly, takes a lot of time to process, and it's hard to assess. According to the report, 3 out of 5 Americans want an update to the system to fix these loopholes. This is a big deal because the central bank, the private bank, the money changers are not going to like Bitcoin. They're probably fighting Bitcoin tooth and nail because the last thing they want is the people to have their own money. This is what's his name? Who was the president before Woodrow Wilson? Andrew Jackson. Andrew Jackson famously said, I killed the federal bank, the Federal Reserve Bank, whatever it was called, the first bank of U.S., whatever it was called, he was like, I killed it. And that put the bank out of business basically for 77 years until the next group of people, the next group of money changers were like, nah, we're going to go back to this way. That's why Kennedy was assassinated. Like, I think like after like 2 weeks of Kennedy, like he did something with the central banks where he was going to start like issuing the people their own money again. Like what's his name? Abraham Lincoln. He was issuing greenbacks. And like literally like a few weeks or a month after that, he got assassinated. So when it involves money, you got to be careful. That's why you got to be like, you have to know your history. You have to know history because the biggest thank you can give the people that were here before you is to know what they went through. Okay, especially when it comes to money because we all need it. But anyways, Americans want more, as the article says. The report, as conducted for Coinbase by the block, showed that Americans have grown discontented about the operations of traditional institutions, with their major discomfort being the increased cost of transaction processing. About 71% of Americans and 9 out of 10 crypto-owning Americans want lower fees as part of the updated financial system. 70% of Americans and 9 in 10 Americans who own cryptocurrencies also stated that they want a faster transaction and one that is not cut short by weekends or banking hours. Another factor American users pointed out as a loophole in the financial system was difficulty assessing providers and applications that sanction their transactions. About 76% of crypto-owning Americans think the system should be made much easier for users to access. Crypto, the solution. In line with the grievances of Americans, blockchain technology has proven to be the answer to the answers. The report showed that the use case of cryptocurrencies provides all the solutions to the angling of Americans. Blockchain technology is known for its speed, ease of assessment, and the low cost of transactions it offers. Although certain crypto networks are known for exceptionally high transaction fees, payment solutions and some layer ones are known for extremely low transactions. A typical example is a wallet that transferred $245 million worth of Ethereum for just $1. Wow. $245 million worth of Ethereum for just $1. Amazing. Amazing. Sensational. Okay. Next we have Analyst. Expect the Bitcoin supply shocks of all supply shocks after April. Let's get into it. This analyst, who goes by the name of Dalmish, his last name is spelled N-G-E-T-I-C-H. Nigetek? I don't know how to pronounce it, but maybe it's silent. Nitek? Probably Nitek. A crypto analyst is bullish on Bitcoin and BTC, saying the market should expect a supply shock of all supply shocks when the network halves its miners reward in roughly 2 months. The Bitcoin mining event in focus taken to X, Ted believes BTC prices will float higher after Bitcoin halves in April 2024. This event, set at the protocol level and scheduled roughly every 4 years or after 240,000 blocks, will significantly reduce the amount of coins entering the market. Wow, this is a big deal. The reduction in supply will make BTC deflationary, possibly increasing prices. This outlook is considered the expected demand that will continue to rise in 2024. The Bitcoin network disperses 6.25 BTC roughly every 10 minutes, meaning 900 BTC is mined daily. After halving, that number will drop to 450 BTC. This sharp contraction will lead to a supply shock, especially considering recent developments such as the United States Securities and Exchange Commission approval of spot Bitcoin trade exchange funds in mid-January 2024. Spot Bitcoin ETFs allow investors to gain direct exposure to the world's most valuable coin without the hassle of storing private keys. This role is delegated to a regulated custodian like Coinbase Custody. Spot Bitcoin ETF issuers buying more coins. Since their launch in January, Ted notes that spot Bitcoin ETF issuers have accumulated over 160,000 Bitcoin. According to Ted, the critical point is the rate at which these ETFs accumulate Bitcoin. Specifically, in the current daily inflow of 5,800 BTC persists, Ted predicts it could easily surpass newly mined coins after halving. For this reason, this will create what the analyst describes as a supply shock of all supply shocks, where demand for hours available supply potentially driving the price up. Yeah, because Bitcoin is store of value. Store of what value? Store value of your energy. It's storing your energy. So here's the hard truth. Housing prices aren't going up. Car prices aren't going up. The value of your money is going down. Bitcoin stores all the energy that you use to get your coins. It stores it in the Bitcoin. When there's less Bitcoin, the price goes up. If God forbid, the people doing the spot Bitcoin ETFs turns out to be like a big Ponzi somewhere or another, where somebody who had access to like the custodian, Coinbase custody, was using these customer funds, there's no getting it back. There's no we'll just print Bitcoin. That's it. This is the biggest shock to the financial system since it started. Ted further points out that the coins held by spot Bitcoin ETF issuers like BlackRock and Fidelity are catching up with those held by MicroStrategy, the business intelligence firm. Bitcoin Treasuries data reveals that MicroStrategy contains 109,000 Bitcoin on February 6th. The public firm bought 850 BTC. BlackRock, Fidelity, Bitwise, and other issuers control 659,401 BTC as of February 6th. The number keeps rising and now surpasses those of MicroStrategy. However, the figure includes those held by the Grayscale Bitcoin Trust, which is gradually being liquidated. Yeah, so that's that news. And then now we have Ripple. Yes, there's so it says XRP holders demand answers for depressing price performance. Frustration simmers within the XRP community as the once high-flying crypto languages prompting calls for action from Ripple leadership. Why are they trying to pump this coin? The point is not for the coin to pump. The point is for the coin to be functional. But yes, obviously, I would want the coin to pump too if I was holding XRP. I'm literally holding like I have like $50 in XRP, $60 in XRP. So I used to have more, but I didn't really understand crypto. That's why I'm reading the news. I want to make sure that I have a firm understanding of what's happening, so I can pick up trends, so I can know what's going on. Because I've been in the space since 2018, and I have to know what's going on. like now, and I'm using YouTube to force myself to like keep up to date because I want to hold myself accountable. The XRP community has been restless due to Ripple's languishing price and lack of clear action. Holders have lost faith, sold off, and questioned Ripple's priorities, fearing further decline. Ripple holders acting like stockholders, trying to demand like price increase so they hold. Like Ripple doesn't. I don't know if Ripple actually needs to hold it. I think Ripple is actually doing fine right now. There has been a perception that Ripple has prioritized internal goals over retail investor interest. Yeah. XRP struggles. Okay, I'm not. Hey, I got Ripple too. I want Ripple to go up. But the point is that this is what's happening. Something you can do about it because crypto, like Ripple, like it's not. You can't just print it. You can't just print crypto. I'm pretty sure like at some point Ripple has a fixed supply of like how many billion Ripple. But the point is crypto is crypto for a reason. Once a shining star, XRP held its top spot among the best performing cryptocurrencies, chasing the likes of Bitcoin and Ethereum. But since 2019, as grappled with a steady decline in price and trading volume, the situation worsened after the U.S. Securities and Exchange Commission filed a lawsuit against Ripple. Even after a partial legal victory against the SEC and unwavering support from its dedicated community, XRP has yet to stage a significant comeback. Tonight, its price is 52 cents, starkly contrasting an all-time high of 384 in January 2018. This persistent slump has not gone unnoticed. Many community members have voiced their concern, urging Ripple's leadership, CEO Brad Garlinghouse and CTO David Schwartz to take decisive steps to boost XRP's value. There has been a growing restlessness and disappointment within the community. XRP holders in distress. The discontent doesn't stop there. Some are losing faith, choosing to sell their XRP holdings or forego further investment. One member even disclosed selling 75% of their XRP and planning to exit the market altogether. The fear of a declining volume potentially triggered by continued drops has also deterred others from buying in. Adding to the simmering discontent is the perception that Ripple has not adequately addressed the community's concerns. Some feel the company prioritizes internal developments and strategic objectives over the interest of retail investors. Why this matters. XRP struggles post-SEC lawsuit raises critical questions about community trust, leadership, effectiveness, and long-term viability of the token. Hey, I mean, Bitcoin... Okay, so if we compare XRP... Okay, so let's not compare apples to oranges, but the point is, I don't know why people are upset that XRP is not going up in value. I held XRP in 2018 when it did go up for a little bit, but then I rode the wave all the way down, so I literally started at break even. I put like 2,000 to XRP 2018. I watched it bring me to like 11,000, and then I just held it all the way back down to 2,000. I took the money out, and now today I have 50,000. I have $60 in Ripple. So I, like everybody, would love to see Ripple go up, but I think with crypto is not like stocks. It really isn't. Like this is way different. It's not like they're actually working in the best interest of themselves. Like stocks are basically beholden to the people that invest in them because their jobs and their livelihood is tied to it. But Ripple has gotten so much massive adoption that people can stop supporting it and it'll still be fine. In my humble opinion. I'm sure my opinions will become more sharp as I continue to do these videos. So the last news that we're going to cover is from Crypto.news. Unknown entity drains 11.2 million in liquidity via SafeMoon deploy contract. So much for that, right? On-chain tracking alarms about unusual 11.2 million transactions linked to a modified SafeMoon deploy contract coinciding with the project's bankruptcy proceedings. SafeMoon's going bankrupt? I think I have a friend in SafeMoon. Oh my goodness. I was talking to a friend today and she was like, yeah, I think I'm going to like go back to traditional finance. And I'm like, why? And she's like, yeah, like it's hard to explain. Well, now I'm seeing that there's something going on with SafeMoon. Wow. Or maybe, is it SafeMoon? I don't know. But I'm pretty sure it's SafeMoon. Let me just look it up. SafeMoon. Okay, what is SafeMoon? Let's see. I'm just quickly looking up SafeMoon, the Web3 movement for everyone. Oh no, it's not SafeMoon. Was it like MoonSafe, something like that? It's like the what's that Moon crypto exchange? The MoonPay. Okay. I just saw Moon. Okay, so so scratch that. My friend was talking about something else, not SafeMoon. Okay. As the press time, the entity holds over $1.6 million in different tokens, including RAP, BTC, Tether, USDT, and Pepe, with the remaining extracted liquidity transferred to Ethereum, BNB Chain, and Polygon. So Cyber's alert said our system detected unusual transactions involving SafeMoon. The deployer added an address as an approved liquidity partner at ETH scan, which then removed liquidity from various pools, transferring $11.2 million to another address. So it sounds like they got hacked. Okay, so Cyber's alert notes the unusual movements commenced after the entity whitelisted an external address for withdrawal purposes. It remains unclear whether these transfers are linked to the ongoing SafeMoon bankruptcy case. Yeah, I'm pretty sure they are. As of press time, SafeMoon has not made any public statements on the matter. Amid the news, SafeMoon's SFM token plunged by over 8%. I bet it's going to continue going lower because you're going bankrupt and you have coin holders. Yeah, they're about to sell that bag. Unless they're not paying attention, then they're going to wish they were paying attention. In mid-December 2023, SafeMoon initiated bankruptcy proceedings with the U.S. Bankruptcy Court in the District of Utah. The bankruptcy filing came shortly after the U.S. Securities and Exchange Commission, SEC leveled accusations against SafeMoon and SEC executives, founder Kyle Nagy, CEO John Caroni, and CTO Thomas Smith for securities law violations. According to the SEC, the trio conducted a massive fraudulent scheme, allegedly manipulating SafeMoon's market capitalization to $5.7 billion through tactics such as wash trading, Deceptive marketing strategies and misleading statements regarding liquidity lockup timelines, while Caroni and Smith have been arrested, Nagy remains at large. Well, there you have it, folks. That's the crypto news of the day. I hope you enjoyed, and I will see you tomorrow for What's Poppin' Tomorrow. Okay, this is DigiHash, and see you later.